Welcome back to Explain the Charts. Today we're taking a deep dive into Google stock, to understand the latest news and what the charts are telling us. As of September 2nd, 2024, Google is currently trading around 163.38, and we'll see if this recent price action can be tied to the news we'll be going over. First off, there's a lot of chatter about Google's involvement in generative AI and the potential competition with Microsoft's investment in OpenAI. Google is aggressively developing its own generative AI tools, including Gemini, which could significantly impact the company's future. However, Google is also facing an antitrust case where a federal judge ruled against the company for its dominance in the internet search advertising market, which could lead to increased regulatory scrutiny and potentially impact Google's core revenue streams. Let's take a look at the daily chart to see if we can find any correlation between the news and recent price action. The most important thing to note is the significant upward trend that started in April 2023, showing a bullish sentiment for Google. The price action has broken through several resistance levels and continues to climb, suggesting that the bull market is still in force. However, we also see signs of consolidation in the past few months, with the price forming a range between roughly 135 and 145, suggesting a potential pause in the bullish momentum. This consolidation could be due to the uncertainty surrounding the antitrust case and the emergence of generative AI, as investors try to gauge the impact of these factors. If we look at the daily chart, we see that Google has recently broken out of this range and is pushing towards the 165 level, which represents a significant resistance level that needs to be conquered for the bullish trend to continue. This breakout could be driven by positive sentiment around Google's generative AI initiatives or the anticipation of the ex-dividend date on September 9th. This event is likely to attract buyers seeking dividends, potentially pushing the price higher. However, it's important to remember that this is a resistance level, and there's a possibility of a pullback or even a reversal if the price fails to break through. The recent volatility in the market adds to the uncertainty, and it's crucial to pay attention to the 1-hour and 15-minute charts for a better understanding of the short-term sentiment. Let's narrow down to the 1-hour chart to gain a clearer view of the short-term trends. We can see a series of higher highs and higher lows, indicating a continued bullish bias in the short term, even though we've seen some consolidation and pullbacks. The 1-hour chart also reveals support levels around 162 and 163, which have held firm during recent dips. The price has been bouncing off these levels, suggesting strong buying interest at these prices. This could be a good area to consider buying, especially if the price finds support and rebounds. However, the recent volatility on the 1-hour chart also makes it crucial to be cautious, as we've seen sudden pullbacks and a spike in volume, indicating potential market uncertainty and quick price swings. It's advisable to use stop-loss orders to protect your investment, especially during periods of heightened volatility. Switching to the 15-minute chart provides an even closer look at the price action. The 15-minute chart shows that Google has been consolidating for the past couple of hours, with the price moving within a narrow range. The recent volume is relatively low, indicating a period of low trading activity and potentially a lack of clear direction. This consolidation could be a precursor to a breakout in either direction, so it's essential to monitor the 15-minute chart closely. Look for signs of increased volume and strong candlestick patterns like a bullish engulfing pattern for a potential bullish breakout. Alternatively, watch for bearish candlestick patterns like a bearish engulfing pattern or a shooting star for a possible bearish breakout. The direction of the breakout will determine the short-term trading strategy. If the price breaks out to the upside, the short-term bias is bullish and you could consider going long. However, if the price breaks out to the downside, the short-term bias is bearish and you should consider going short. In conclusion, Google is facing a lot of headwinds and tailwinds, and the recent price action reflects this uncertainty. The antitrust case and the emergence of generative AI are creating market volatility, but the company's aggressive AI investments and upcoming ex-dividend date could also drive the price higher. The daily chart reveals a strong bullish trend, but recent consolidation suggests a potential pause in this momentum. The The price is currently testing a crucial resistance level at 165, and breaking through this level could signal a continuation of the bull market. However, a failure to break through could lead to a pullback or even a reversal. The 1-hour chart reveals a short-term bullish bias, with higher highs and higher lows. Support levels around 162 and 163 have held firm during dips, potentially presenting a good entry point for buyers. However, volatility on the 1-hour chart requires caution, and stop-loss orders should be used to protect your investment. The 15-minute chart indicates a period of consolidation with low volume and limited price action. This could be a precursor to a breakout, so closely monitor the chart for increased volume and strong candlestick patterns. The direction of the breakout will determine the short-term trading strategy. Watch for bullish engulfing patterns for a bullish breakout and bearish engulfing patterns or shooting stars for a bearish breakout. Remember, always consider the latest news and market data when making trading decisions. Good luck and happy trading!